equities market, Nigeria witnessed a 10.7% year-to-date gain last week as investors position ahead of the dividends declaration for 2021 financial year. And I have Tijani Oladipupo, the head of Norrenberger Advisory Partners. He joins me now for a look at the equities markets here in Nigeria. Thank you so much for your time today, Tijani. And let's first get what sentiments are like today.
All right, good afternoon to you, and thanks for having me. So in terms of what the market sentiments are today, obviously not far from what our expectations is, especially for this part of the quarter. In anticipation of expected results, trading turnover has begun to increase, as we saw last week, hitting up to 1.78 billion shares, as is against 1.4 billion shares that were traded earlier week. Of course, also the financial service industry continues to lead the gainers charts, of course, followed by the conglomerates. Like I said earlier, interestingly, the market is gathering momentum. So in the first quarter of the year in anticipation of the expected results by these companies.
All right, but let's look at some of the sectors here, because especially since the results came out last week, talking about the telecom space. We saw Airtel Africa there, quite impressive results there as well, and MTN as well. What do you make of this sector going forward?
All right, well, on the back of financial services, the telecom sector is part of what the market is looking up to. Unfortunately, the MTN result was neither here nor there at a dividend of 8.57 kobo. I think it's quite not up to what the market expectations are. That's about some 4.28 dividend yield. I think just like what we experienced last year, what I would feel is that the market will have expected more, even though we've seen the capital appreciation, and then of course on the back of its public offer, and the same also goes for Airtel in that sector. And then of course on the back of financial services as well, the market has very high expectation in terms of dividend yield on the various price earnings ratio that are turning up across the sectors.
Yeah, because good you mentioned the financial services, because definitely quite a lot of anticipation in that regard. But what's your house call on what to expect from the earnings?
Earlier, I will expect dividend yields and earnings that will what investors are generally expecting, given that the fixed income market is doing what it's doing. Investors will be seeking to see dividends that are quite attractive as to what happened last year. I think the market generally expect more from these banks. A number of them are doing far below the 9% point. The market is generally expecting that we have to have these funds in this segment. And of course, they need to do much more than what was experienced last year during the quarter.
All right, last week the exchange had the market recap and outlook event. They're talking about what to expect there. For you, what would you say looking into this year is the biggest thing to expect? I know there's quite a lot in the works here.
Yes, quite a number of them, both in the equities market and the fixed income market as well. The essence is clear about new products, services that will, motivate the market to have funds quite significant flowing back into the equities market. In terms of listing, it's quite clear. More companies will also come for listing. The essence is quite aggressive about its strategy this time around. We're looking to see a more buoyant market. We're looking to see a more liquid market. We're hoping to see more companies listed as the exchange comes under its various strategy. On the back of that as well, like I mentioned earlier, we're hoping that these companies, especially those where they were able to trim up their expense margin, will be able to declare brilliant results such that investors are clearly able to enjoy higher dividends yield, as such that investors will be motivated to move funds into these segments of the market.